Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 15th here on Monday in 2022. And we will not call this a relief rally. There's nothing to relieve. It is a repeat rally. Repeat rally with the strongest equity market being the Nasdaq. And the Nasdaq is our technology-heavy or tech-centric index. And we'll look also at XLK, which is an ETF that tracks and trades similarly to the Nasdaq. It is our technology sector. In tonight's video, we'll go over the broad levels in the market. We'll talk about some big earnings coming up this week: Home Depot, Walmart, Target and Lowe's, and then Cisco, and also some of the stocks in the big market cap plays. Where are they? Where is Apple? Where is Tesla? Where are Amazon, Google, and the others, and Microsoft, and other stocks in the big market cap? And also, which stocks led the market up to new 52-week highs in today's rally? But let's first start with our S&P. We had a repeat rally. And by repeat, I just mean similar to Friday's session, which started mostly as a range morning that gave way to a breakout trend. And today's session started as a range day, gave way to a breakout trend. It is a repeat rally, and we're still playing off in the risk zone as opposed to the reward zone. Nothing's changed there in terms of probability that the market has a little better odds, or at least a better risk reward play, to be going short or bearish or defensive or hedged, if you aren't already, into the strength of this rally. And this rally has taken the S&P futures, making a comparison to the end of March into April. No big change just yet. From about 3,700 to about 4,300. That was the top in today's session so far. And that is similar in play. Now, again, the risk as in losses and hedges start to pay on the bull side, continue here, and the reward is for a downside move. It would be far too late from a probability game to be stepping into markets long, assuming you're not positioned after this type of rally. Would not be a good reward to risk relationship. Now, that does not make any predictions. It just makes a risk reward comparison. And the Nasdaq, no different. Its upper bound is about the 14,000, and that's about the 200-day simple moving average for the futures market. In the Dow, it's seen a little bit more strength, and that rally is stronger. If we look at a percent basis, that's about a 9 or 8% rally in March to April, not counting the low, just the immediate current rally. And that's about 11% off the lows. Just watching that in perspective. And the Russell is our small cap index. It sees a stronger, much stronger rally than we saw into March and April. So downtrend still in play, but it is under threat. And we have to be objective. We cannot predict futures. We do not know where the market's going to go. All we can do is play positions and risk reward. Upside potential does play well above 2,000 and 2,060. And that's big picture for the Russell and the other markets. And this is what we continue to watch, which is inflation. Inflation numbers. Are they down? Are they still high? Or are they beating expectations? In terms of crude, that's a good market to watch if you're checking inflation. Crude, again, not necessarily from the all-time high or the swing high in 2022, but from about that 120 down to about 89, 88. That's roughly a 25% decline in crude oil prices. Keeping the thought with inflation, ZW is wheat, and wheat is off, making new contract lows in the 2022 in this year. So that's if you're betting on inflation or wanting inflation to come down. We all typically do want inflation to come down. It is going to show up in these futures commodities and others as well. ZW is just one of them. That's wheat. And you can take a look at the other futures markets. But we'll be watching closely oil, wheat, soybeans, oats, and other markets. Not necessarily trading them, but just getting a sense of inflation on the upside or on the cool down. And that is a good sign if you are wanting inflation to decline, and that could be a broader good sign for the equity market. We'll step away from inflation thought, we'll step away from other futures markets, and we'll just talk first about Home Depot and Walmart. They have earnings right before the bell tomorrow's session. So what might be plays if you are already positioned, or what levels are we keeping focused in these markets? Just to name a couple, here's Home Depot. And for intraday, or at least the futures or the earning-based expected move, that has roughly a 59% implied volatility. That goes out to Friday with about $15.30. Won't do all those just for time's sake, but that's what the expected move logic on the earnings would be for Home Depot. And it still presses up against that 315, 316 level, which again is another this much, but no more price to zone. Similarly, Walmart, a big retail name, one of the biggest retail names, that's about the 135 per share level, this much and no more. That comes down to this sell side. There were some warnings, there were some future guidance, and that sent a lot of stocks, at least in the broad market, with a warning sign. If Walmart is having some problems and guidance on their forward guidance and forecast, well, that can't be good for the broader economy, and that was, as we say, maybe a canary in the coal mine. But Walmart shares have traded in a range since May between 120 and about 135, where we are now. Again, it has earnings. We're looking at the 4-day out option. That's Friday, but earnings take place tomorrow, with another 58% implied volatility, $6.55 up and down. And we will be discussing Target later, but not much of a dissimilar play or sympathy play to Walmart, which had its gap and sell side and the warnings and the guidance, and a range from 140 up to about 170. Much bigger gap in Target. Finally, Lowe's and Home Depot Lowe's go together. Walmart, Target, for the most part, go together. Not a lot different in that retail sector name. Its price point is about 208 or 210 in terms of the this much, but no more. And its implied volatility, 75%, with around a $13 expected move. And just while we're on the stock front, these are some of the names of the broad market leaders of market cap. And we'll put this over here. The market cap is what, for large part, drives the Nasdaq and S&P, the Dow and the Russell, or a little bit different how they move with the indices. But we'll just take a quick look in tonight's video, Monday here to start the week, on where the top few companies, the ones that are above $1 trillion and just close to $1 trillion in market cap. Just a quick look at the daily on the left and weekly on the right. Apple is, as we've discussed, is and continuing to be in a trading range. Apple is not in a downtrend. Again, looking back to the S&P, that's a downtrend, but Apple shares, leading stock, is actually more or better assessed as a trading range. That takes it from about 140 per share or 135, go back to these weekly charts, and that does remain in an uptrend, that has reached the 155, now trades above 170, and a potential play, if that low to high is to be achieved, into 180. Now Microsoft is in a downtrend, or remained in a downtrend. Just like the market, it saw a strong breakout here into August in this month. And that is up to this much and no more for Microsoft. That's $295 per share. Google, which had its split, is in a downtrend, but is a little better classified in the short term, at least May to present, as a trading range. That makes 105 to about 120 a range high and range low. And outside of Google, we'll look at Amazon. Not much different. See, these levels of range are a little better at guiding the thoughts or guiding the structure of opportunities, trades, risk, and that's just playing a structure, and then low to high, high to low type logic in a trading range. Amazon had a strong sell-off. Again, its stock split as well, getting used to these new prices and positioning in new prices, but nonetheless, it has a trading range between split adjusted 140 up to 170 and down to all important 100. And finally, Tesla has its trading range as well, not necessarily a downtrend. Why we don't call it a downtrend is that it had a strong rally here and it does not fit the criterion. Again, think of some of the stocks that we would look at. For example, NVIDIA, downtrend, or some of the other famous names. Meta would be a downtrend. Netflix would fit the criterion of a downtrend. But these stocks are a little better described. Again, see that weekly chart as a broad, wide, sideways trading range. And we'll look at NVIDIA. That again, we saw that as a downtrend, which its level is going to be about 200 per share. And a quick look at the stocks that made new 52-week highs in today's session in the S&P 500, 22 of them. Some of the leading market cap names would include Pepsi, Automatic Data, ADP, Cigna, CI, Vertex, and some of the other names you can see on the screen: AutoZone, Excel Energy, and others in play. We have a whole week ahead of us and beyond. The middle of August is right here, so always be careful and safe. This is Corey Rosenlund with tonight's video update for TheoTrade for August 15th, 2022.